Hello guys, this is FX Trading Academy and welcome once again to my YouTube channel where we do mostly the top-down analysis of different financial securities, and today we're going to be looking at the forex currency per Euro GBP. And without wasting much time, let's get to it. And as you all know, for those that have been following me for some time now, I do my top-down analysis using pure price action trading strategy where we combine support and resistance zones, trend line, as well as the Fibonacci retracement to working our way down from the higher time frame down to the much lower time frame with the hope of getting tradable opportunities. I'm currently on the monthly time frame, and basically what I try to do on the monthly time frame is to map out my key zones, which are the horizontal bars you are seeing on my chart. And if you don't know how to do that, I have a video on the channel dedicated to it. So the second thing I try to do on this time frame is to get my directional bias. In other words, where do I think the market is going? So quickly, let's look at how to do that. So if we look at the way the market has been moving all the way this from 2003, so that's a long time back. So if we look at the way the market has been moving up until now, can simply see that from those parts the market was making lower lows and lower highs. Now how do I mean? It made a low, a low, a lower high, a lower low, lower high, a lower low, lower high, made a deep low, came back all the way up to make a lower high, and then the market went into a range. So most recently, we can say that the Euro GBP has been what? Ranging. And how has it been ranging? It has simply been moving between support and resistance zone. So the market is currently here. So the range that we have has been started from this place. So this market, if I'm to zoom in, has been moving between this support level and this resistance level. So we had market getting to this point, coming back here, getting here, coming back down, getting here, was rejected massively, came back down. So it will be sensible for us to say that our directional bias is still bullish. Why? Because for the past 10 years, so if we are to look at from 2015 till now, for the past, so the range started in 2015. So we can say that for the past 10 years, the market has been moving between this resistance zone and this support zone. So it's the sensible direction to take would, or the sensible way to view our direction would be that the market is heading back to this resistance zone, having left this support zone. So that does it for all we try to do on the monthly time frame. So the next thing we get to do will be to go to the weekly time frame. Now on the weekly time frame, what we try to do is to get a structure of the market to work with. Now how do I mean? To get like a chart pattern. What can we get like a chart pattern where we can get a reference point to work with? And then we also try to see like the trend of the market. So if we look, when I mean the trend of the market, in other words, we try to see if what we are seeing on the weekly time frame um solidifies our initial take from the monthly time frame. So simply put, if you look at the weekly time frame, we can see that the market is in an uptrend. So this means that our initial take on the directional bias seems to, from the monthly time frame, is solidly supported by what we are seeing on the weekly time frame, because we can see the market making higher highs, higher low, higher high, and then we are seeing like a structure here. So the next thing I get to do will be to go to the line graph to see if I can see a structure of the market jumping out to me. And the first thing I can see here is that the market made a high, came back to make a low. There was a failed, it tried to make a new high, it sort of failed, and the market is just within this place. So what I can say is that there isn't really a clear chart pattern. But however, we know that the simple bullish movement is that when the market makes a high, it comes back to the higher low and then tries to get enough liquidity to push higher, which seems to be what the price of the market is currently doing. So because this is really not clear, I can say that the structure I could work with here would be this. The market coming here, this was a failed high, came back down, and then still trying to push upwards. So to help see if I can get a better view of the structure, I'll go to the daily time frame. I call the daily time frame the tradable time frame because there we get to see like the most recent happening in the market. So at this point, I can add my trend line just to guide me as to the movement of the market. So doing this, I can then zoom in to see if now I can get structure of the market early. So now we can see that the market made like a W pattern. And from what we can see here, price is currently retracing. So where do we hope price should retrace to? If price can come back to this trend, and remember we're going upward. So if price can come back to like make a touch of this trend line, or if we can go deeper into the much lower time frames, then we can see if we can get something to work with. So at this point, I can see that the sellers are trying to push price downwards. So I can as well come here back to my line chart. So the best place to engage this market would be if the price can come as low as this point where we have like the neckline of the W pattern. But because we are not really seeing anything to clearly jump at, because the market just pushed upwards and it's currently making a retracement even on the daily time frame, then we can go to the much lower time frame, the the 4 hour time frame. So if I take this out, I need us to pay a lot of attention to what's happening here. Now let's take this whole price movement from this point. Now we can see that the market made an a head and shoulder pattern here. This was a head and shoulder pattern, which is a bullish reversal chart pattern, a bearish reversal chart pattern. So price broke beneath, came back to retest the neckline, and the market went into a range. So if I pull this way, I need us to pay attention here. So if I pull this way and then I clone what I have here, I can bring it back. So we can see that the market went into like a mini range on the 4 hour time frame. It broke out of the range to give us a new high. Now this was the range, broke out of the range to give us a new high, and price came back to retest the neckline of the range. So if I zoom in, for those of us that like trading on the lower time frame, if I zoom in, the best time to have entered this market would have been here. So immediately price came here, you would have taken your trade and your stop loss would have been here. But the question is all hope lost as regarding this market? Let's not forget that our directional bias is that the price is going up or upwards. And if you look at this setup, you can see that the market has been making higher highs and higher lows. Just made a high, came back to the neckline of the range. So it is expected that price will continue upwards. So we'll now go to our refinement time frame, which is the H1. Now the H1, if I zoom in and I go to the line graph, we can see a double bottom here and price is making what? Retracement. So the best thing to do would be to monitor the trade closely and even place like a marker here. Remember that a double bottom is a strong bullish reversal chart pattern. So this setup is looking very good in the sense that once we can see that price is coming into this place. So this is a double bottom here, price is here. So once we see the presence of buyers, because we can see that the momentum, the bearish momentum of the sellers pushing price downwards to retest the neckline of this double bottom seem to be strong. So we have to wait for the green candles to start appearing. And when that happens, it wouldn't be bad or too risky to place our trade with our stop loss underneath. Then we can have a good risk to reward of about 3. But I wouldn't want to jump into this now with the bearish candles, the size of the bearish candles I'm seeing. So once I'm able to get like the presence of the green candles, then I can start thinking of what jumping into this particular trade, because the sellers might still push price down a bit. So once there's a change in structure, then I can jump into this trade. Or once this I see a rejection of one of these red candles to give me like a pin bar, then I can jump into this trade. I hope this video isn't too long, but this is my take on this particular forex currency pair, EURGBP. So if you are into the trading of one of these minor pairs, then you can compare this with your own analysis and drop your idea or take in the comment section. If you are coming across this channel for the first time and you like this style of analysis, simply subscribe for subsequent videos so that you'll be the first to know when they drop. And you can also do well to like and share for others to gain from it as well. So thanks a lot for stopping by my channel. Thanks for watching till the end. Do have a fruitful trading week ahead. Cheers.